What's good, everybody? Spektrades back here. In this video, I'll be going over a powerful concept that will get you funded fast. If you are new here, my name is Wendell, also known as Spektrades. I am a full-time day trader at 𝗁𝗏 University and a full-time mentor. So make sure you guys follow me on Instagram at Spektrades if you guys need any help. Without further ado, let's get straight into this video.
Before we hop on charts, we have to go over this schematic right here. This exact concept I'll be going over in depth, and our trading plan on how we're gonna execute this schematic. As you can see right here, this will call a inversion fair value gap. The inversion fair value gap is basically a fair value gap that has been violated. As you can see, the fair value gap composed of 3 candlesticks, 1 candlestick, and then there's a gap between the price action, and then we have a 3rd candlestick. That right there indicates that price left a zone inside of price action that price has to come back and mitigate before returning. As you can see, price came back and price was supposed to hold in this zone right here to push higher, as you can see, because this is a bullish fair value gap, but price went lower and violated it thoroughly. And then we can see that price came back into it inside of that inversion fair value gap to push lower. This we will call a inversion fair value gap. After price violated, this now in turns into a bearish fair value gap. Price will come back into it to push lower. It was once a bullish fair value gap where it was supposed to be respected to go higher, but now price violate through it. Price will come back into it to push lower to continue the price action. As you can see right here, this is the trading plan that we have. Mainly I trade the New York session, which composed of continuations and expansions. The key times that I trade the New York session is between the 8 a.m. and the 1 p.m. This is the morning session / the noon session, and then we have the 2 p.m. through 4 p.m. This will call the New York close. This is the afternoon session. And our main targets are usually Asian highs or Asian lows, or any points of external range liquidity that we may see on the market. The main objective that we look for is to just distribute after the pullback. As you can see right here, after price violates our inversion fair value gap, price will come back and retest it to push lower. What we want to do is for us to catch that distribution move. So on that pullback, we want to enter to then push lower. As you can see, the risk management essentials that we have is the general rule that I always state is to only risk 1% of capital for day trades and scale down. If you are not able to risk 1% of your capital, make sure you are scaling down to use either a 0.5% or 0.25% if needed. And then the mental game is to just embrace losses and just stay adaptable. And remember, you can't control the market. You have to just react based on what price is showing you. But this right here is just a simple schematic of the inversion fair value gap. We'll be going in depth on the charts to break down this thoroughly. And now that we're on the charts, we're gonna go over our inversion fair value gap in depthly and exactly how we use this inversion fair value gap. As you can see, this is what we call our inversion fair value gap. Let's zoom in. Just like I stated, this is just a fair value gap that was supposed to be a bullish fair value gap. Price was supposed to come here to push higher to continue this bullish movement. As you can see, price was in a bullish uptrend and then left us this bullish fair value gap. So price was supposed to come in here to push higher. But as we can see, price came lower and purged through this inversion fair value gap. And then on the 9:30 open, 9:30 market open, price came right inside of this inversion fair value gap perfectly. As you can see, price came right back into it to clear this relative equal high to push price lower. As you can see, now you might ask, how do we enter inside of this inversion fair value gap? Us to enter inside of this inversion fair value gap, you can either take the risk entry. The risk entry is just the first entry where you have a wider stop loss. You can take it right at the open of this inversion fair value gap, which is stop loss right at the high. And then just like I stated, we're targeting Asian lows. This is Asian lows right here. Or we may target any external point of liquidity. As you can see right here, this is a external point liquidity. Perfectly, a perfect drop to the downside. But this entry right here is what we call a risk entry. We mainly don't use the risk entry because it's too wide of a stop loss and we are not sure if this trade right here will hold. We do not trust the market fully. We just react based on what we see. So we have to scale down to the lower time frames to see a more precise entry for us to enter a more continuation entry. And furthermore, I'll be going over more concepts inside of this video right here also. So make sure you guys stay tuned throughout the video to understand this video fully. As you can see, let's scale down to the 3-minute time frames. Now on the 3-minute time frames, as you can see, price went higher to clear this relative equal high. This is our 15-minute inversion fair value gap. We're just gonna put it IFVG. Perfect. On the top right. Now, for us to get our confirmation entry, because we're not too sure of this risk entry, right? If you're a person, you're willing to use that wider stop loss, the risk entry would be perfect. But personally, I used a confirmation entry just for me to get that firm confirmation for price to go to the downside. As you can see, what I'm waiting for is for a firm market structure shift of old lows, and then for price to retrace and use the old lows that price broke through for me to get a firm entry. As you can see, price came lower after price tapped inside of our 15-minute fair value gap, inversion fair value gap. This is our market structure shift of this old low. And now what I'm looking for is for a retracement back into this zone right here for me to get my snapper entry. As you can see, price left this IPA right here. I talk about the IPA in the course down below. Make sure you guys take that free course, is down below. It's a 1-hour course. It explains every concept and basically a lot of stuff and a lot of value. It also has a trading plan right inside of it also. So make sure you guys take that free course. It's down below. Link in the description. As you can see right here, price will come back and reuse this IPA right here. All we have to do is just place our entry. Perfect stop loss right at old highs. This is what we call a confirmation entry. Price has now confirmed this inversion fair value gap. Of course, if you're a person, you want to use both entries. This could be a first entry right here, one entry, stop loss at old highs, where you're targeting Asian lows or a entry point of external range liquidity. And as you can see, price came back and used our confirmation entry. As you can see, a little smaller stop loss right at this IPA high where we enter. So right when price give us our market shift, this is going to be our entry right here, where price is going to pull back right into it, tap inside of our entry to push price lower. Perfect. This is what we'll call our inversion fair value gap model. This model right here is a truly powerful model because it has a lot of things in line. As you can see, we have a fair value gap that was supposed to hold to push price higher, as you can see, but price violated through it, and then price came back higher, left our inducement highs right here. This is a point of liquidity. Whenever you see relative equal highs close to your zones, this is a great sign right here that this zone right here will possibly hold. As you can see, price left this relative equal high right here to go lower, purge through this relative equal high, tap inside of our inversion fair value gap to push down lower. So this right here is your risk entry. And then after this entry right here, price went lower again to give a market structure shift of this old low to dump lower again to clear this Asian low right here. And this is where we catch our confirmation entry, where price now will pull back inside of this zone right here, tap inside of this IPA or stop loss right at the old high. This we'll call a confirmation entry. This is my personal favorite entry because now price has confirmed this entry, and I can scale in even more because I'm more confirmed of this entry. As you can see, after price tap inside of our entry, price will now push lower to come and clear any zone, any external range liquidity low. In this schematic right here, just like I stated, we have some more things that we have to speak on. A lot of people ask me questions about the inducements. The inducements are just clear zones and clear order blocks in price action that price engineered to trick traders. As you can see right here, this is a clear order block right here. As you can see, price did a liquidity sweep of these old lows and gave us a market structure shift. Perfect. But as you can see, this is all internal range liquidity. That's why this is a inducement. The leg, as you can see, is from this old high to now this old low. Price was just going back higher, building internal range liquidity to create this inducement right here, this inducement order block. So a lot of traders, they see this as a clear, perfect engulfing order block. This clear, perfect engulfing order block is too perfect. It's way too perfect. And look at this low right here. This we'll call a liquidity low, right? A short-term liquidity low. A lot of stop losses are hiding below this low. As you can see, all price was doing was pulling back to mitigate this fair value gap right here. Tap inside of this fair value gap perfectly to then push lower to clear all these old lows, as you can see, perfectly. So this inducement order block right here was just engineered to trick traders. So a lot of traders were possibly extending this right here, perfect, tap inside of this zone, stop loss at this old low, trying to target old highs, perfect. But little do they know that we were already in a firm downtrend. That's why you have to do a top-down analysis. So make sure you guys watch my last video on exactly how we do our top-down analysis. So as you can see, after price left this inducement order block right here, a lot of traders placed their stop losses at this old low, and their stop losses, just like I state, is our take profit. You can see after price tap inside of our inversion fair value gap to go lower to give it a market structure shift, and then when we scale down on the 3 minutes for us to get our confirmation entry after price give us this solid pullback, where do we target? We we are targeting these retail trader stop losses perfectly. So in this video, I've explained to you guys exactly on how to use this inversion fair value gap. So make sure you go on your charts and look for these for yourself. These inversion fair value gaps are truly powerful because they have been violated. It's like a breaker, I will say, right? Just like you see a breaker have been violated and price will come back and reuse that breaker to then push lower. These inversion fair value gaps are the same, I will say. After price violates these fair value gaps, they will turn into inversion fair value gaps where price will reuse them to push back lower. Or we can invert scale. As you can see, is the same thing in a bullish format. So if this was a bearish fair value gap that was supposed to hold to push price higher, but then price violate through it, as you can see, price will then come back and reuse it to then push price higher to clear old extra range liquidity points. This video right here was just a short and sweet video I just want to make for you guys, so make sure you guys go on your charts and look for these concepts for yourself. If you guys want more videos, make sure you comment them down below. Make sure you like, subscribe, and comment what you think. This is it. Spektrades out.
And back to the video.